Star Trek Voyager used to be one of my favourite sci-fi shows, and so when I got a message from one of my subscribers asking me to review Spaceship Voyager portfolio, having not heard of it before, I thought, well, why not? So let's go and have a look at what Spaceship Voyager is all about. Nothing to do with sci-fi, more about investing your hard-earned cash. So this is the homepage for spaceshipinvest.com.au, and they're advertising here their investment app, Spaceship Voyager. Now, Spaceship Voyager offers you two options. You can either invest in the Spaceship Index portfolio, or you can invest in the Spaceship Universe portfolio, and you can see here that one of them has 200 companies and the other one has 100 companies. And you can explore those portfolios, and we'll have a look at that in just a moment. Now, what one of the attractions might be to go to this particular application is the fact that if you have a balance below $5,000, then there are no fees whatsoever. There are no brokerage fees, no holding fees, no opening the account fees, just nothing. You get it totally free of charge, so up to $5,000, put your money in, select one of those two funds, and away you go. You're invested in a range of companies across the world. Now, if the balance does go above $5,000, then there is a small fee that you do have to pay. In the index portfolio, you pay 0.05%, which is very, very little. And for the Spaceship Universe portfolio, then you pay slightly more at 0.1%. And this is sort of around about what the Westpac brokerage rate is. But of course the brokerage rate is on every trade. In this particular case, this is just calculated once at the end of the year. They do allow for, or they do take into account the variation in the size of the account, so you can't just go and draw all the money out at the end of the year and then have no fee. But nonetheless, the fee here is very, very small. You have options to make weekly or fortnightly or monthly contributions, and that would be done on a direct debit basis that you would set up between Spaceship and your bank, and that offers you the chance then, of course, to start, if you like, dollar cost averaging into this index heading towards your retirement, which could be for many of you perhaps 40-45 years away. So this might be something that really suits you if that's your thought process there. What we have here is where they're investing your money. So you can see here a little bit in Luxembourg, a bit in France, most of it in 55% over in America. And here we're talking about the Spaceship Universe portfolio. If we come over here, we've got China at 9%, Australia only about 17% of the portfolio, and then small proportions in these other countries. If we go to the Spaceship Index portfolio, we see a slightly different mix. We've got the United States at 43%, Australia still 17%, China 9%. Now we're over here in Brazil, down there in South Africa again, New Zealand, and so on. So you're spread quite a way around the world in these investments, whether you're in the index portfolio or whether you're in the universe portfolio, both of which, of course, if you're under $5,000, no fees. They also give you a breakdown of those portfolios. So at this stage, I'm looking at the 100 companies in the Spaceship Universe portfolio. I'm on Alibaba there, but we'll go to A2 Milk. And this is the first point where I come to some concerns about the presentation of their material. This particular chart here, as you can see, says year to date, but there's no dates along here. There's no price value up there. It does say that the share price is $10.32, but I guess we have to guess that that's over there. If we scroll down here, you get a little bit of information on what the company does. Then you move down, and then they explain why it is that they particularly like that company, and so therefore why it's in the portfolio. And then lastly, they move on to the risks that are associated in holding that company. Now, they do that for every single stock in the portfolio. So for example, if we came across here to Apple, basically it says what do they do, beautifully designed consumer electronics, etc. Why do we like it? That's because one of the strongest brands in the world, and on they go, and so forth. So let's go back to A2 Milk, because I want to comment on this chart. If you look at the chart for 1 month, it says that it's got an increase of 10.4%, but this is nothing like what it is currently. I've got no way really of working out at what time period this actually has been displayed from. So if we actually have a look at a chart of A2 Milk, you can see here, this is a chart going back, what are we looking at here, about 2.5 years, I suppose. I was just looking for a spot where it could possibly have been $10.30 odd, which is on their chart, which is sort of around this region here. So whatever the case, wherever this particular chart that they've got's coming from, the most recent it could possibly have been is back here in January sometime, early January. So the data that they're showing here on this particular screen is way out of date, and for a company that is supposedly high tech and at the cutting edge, I can't really see why it's not possible to update these on a daily basis. For example, if you asked me what my portfolio was worth at any time, I could just click on my Westpac site and I could tell you instantly how much it's worth and how much each stock has gone up since I bought it, and so on. So I've got no explanation as for why these are so much out of date. Some other information we've got here, we can see exactly how many customers they've got, 39,000 customers on the Spaceship Voyager app across those two portfolios that I'm talking about, but they're only holding $27.5 million of funds under management as at the end of February this year. Now that equates to around about $700 per account, so they're definitely not earning any money from there. If they come over here to the super fund, which was launched in 2017, that's now got $232 million under management as of February, and with 5,500 members. So if you go and have a look at what their charges are, which is a $78 per year annual fee, plus depending on which of their portfolios you're invested in, it could be around about 0.65% up to 0.99% is their annual management fee. By the time you add all those together, turns out that that comes to around about 1%, and so therefore they have got income of around about $2 million a year coming in as a result of that fee structure in their super fund. Who are the people doing this for you? Well, here's the management team, 5 people there, the investment team, youngish looking people, moving on engineering, growth, and product and customer success. A fine looking group of what I would probably call millennials. So what we have here is a company of millennials providing an investment app and probably targeting millennials, people in their early stages of their work life, and looking to get them into some investments and hopefully secure them as customers for the future. One of the other screens that I found on their website showed the structure of their portfolio, and it's a pretty cool way of showing it really. Facebook, and they've actually got the amounts there that would be invested in these companies if the portfolio had $100,000 in it. But I've highlighted down here the fact that that's the holding as at September 2017. And so there's another case of the company's website not being very up to date at all, which to me says, not really as professional as I think it should be. Some other things of interest that you might want to know is that last year they were fined by ASIC for misleading advertising, penalised the super fund. We will fight to get you the very best assets in your portfolio. We will measure companies in our portfolio based on their ability to provide defensibility of profits and high levels of product differentiation. However, ASIC said 79% of the fund was invested in index tracking funds at the time, involving no qualitative analysis of underlying companies. Spaceship and its trustee have each been fined $12,600 over the claims. Now, that again is a lack, I think, of true professionalism if you are advertising something that you are not doing so that you can attract people into your network. Not good. Now, if we go to the product disclosure statement, and I encourage you all, if you're interested in this particular approach, to do that, The fund aims to provide investment returns that track the performance of the following reference indices. So it's an index fund of sorts. The index they're following is not something that you'll find in the ASX or from Standard & Poor's. This is their own index. The Spaceship Capital Index Solutions has created this index, and actually I don't really mind the index at all. They're using a thing called WWG methodology. Looking at that, you find out what that means. It's where the world is going, but as you go and search through any of their documentation, it's very, very vague, as is most of their product disclosure statement about what this methodology is. But this methodology, whatever it is, reduces your exposure to mining and banking and increases your exposure to technology and healthcare. And really, amazingly, that's pretty much what my portfolio looks like. So I probably shouldn't be going here and even attempting to bag out what their methodology is, because I suspect that if I was to look at the Australian stocks that they are holding, that the structure of their portfolio would look a bit similar to mine. The last thing to be a little bit mindful of is managing the withdrawing of your investment from the fund. Firstly, it's not going to be anywhere near as quick as perhaps investing in an index fund on the ASX, in which case you would settle within 2 days. This is going to, says, usually be paid to you within 5 business days, usually meaning, of course, well, it could be longer. You need to be mindful of the fact that it might be a week or more before you actually get your funds if you decide to withdraw your investment from the fund. But more disturbing is the fact that we may suspend or delay withdrawals in certain circumstances. So they are allowing themselves the ability to not pay you out your money in a timely manner, depending on situation in the stock market or the look of their fund, whether there's not enough liquidity in the stocks they are holding for them to be able to get their money out so that they can then pass it on to you. Whatever the case, this is something that happens often in managed funds. They have this disclaimer in there that says, well, there might be times where we can't get our money to you. For me, that's something that I certainly would not be too keen on. So at this stage I can say that I won't be using this service, but doesn't mean to say that it's not a good service. Here we have the allocation of their funds. As you can see, target range 70 to 80% in overseas stocks and 15 to 25% in Australia, and then some cash. So how do they make their money? Good question. Well, I guess it's not from Spaceship Voyager, because as we can see, with an average account size of only $700, they are making no money whatsoever from the investment app. So why then are they offering a free app to anyone at all? Well, maybe you can add into the comments your views on why they're offering a free app, but I think it's basically just to get you onto the books with a view to investing in their superannuation funds, where their management fee turns out to be around about 1% per year. Now, of course, at the moment, with $240 million odd in their super funds, they've got about $2 million of fees coming in. And as you saw, there were, maybe a dozen people working in the company, although I think on one of the pages there it says they've got 40 employees, so there's a lot of people need to be paid. They're also backed by venture capital, so therefore there are investors also pouring money into this particular company. So, they're highly motivated to build up this superannuation fund, I think. And as it gets bigger and bigger, then, of course, the amount of money coming into the business will grow and grow. So for round figures, if it got to the stage of the fund holding $1 billion, then that would give them $10 million of fees coming into the business, which would be very nice in my bank account, if I don't mind saying so. So, summing up, before we sign off, what's my view on Spaceship Voyager? Well, much of the data on the website's not up to date. That's a negative. Some of it almost by 2 years. Charts have no scales. There is no historical performance data, which I haven't mentioned yet, but there is no way really that I can see of gauging how effective their screening for their portfolios has been. I did see in one of the blogs that someone said they made a return of 19%. but I would have thought that if they had returned 19%, they would be up there advertising that for sure. And in some late breaking news, I have finally found some results. Now, it's not coming from the Voyager page on the Spaceship website, it's coming from Reddit. And I don't really know who's posted this, but nonetheless, it looks sort of like well produced. So maybe it's an accurate representation of how they've gone. Total return 31st of May 2018 to 31st of May 2019. We've got returns of around 11.5%. Which is not too bad if that's what they actually have returned. STW, the ASX 200 index, including dividends for that particular period, returned a tick over 10.5%. So their portfolio has performed at least as well as the ASX index, in fact marginally better. No way of telling whether this is a reliable description of how they perform because it's just off of a blog. And there you go, added to the story. I hope that is helpful to you. And then, of course, the last question, which we've just had a look at, why are the fees zero for balances less than $5,000? Well, I've already explained why I think that's so. So summing up then, is this a company that you should be using to help you invest for the future? Well, if you're just starting out, then I really can't see too many issues with deciding to go with them. The zero fee structure for account balances under $5,000 is a very compelling argument. Looking at their product disclosure statement, in spite of the fact that there's these issues around maybe holding back redemptions and a lack of real clarity about their selection process for stocks, in general terms, I sort of like the way they're going about putting their portfolios together. As I said, it very much mirrors, I think, what I'm trying to do, but they're not telling us how they're doing it, so therefore I can't comment on it. For you youngsters and those of you just starting in the market, I think this is something worthy of your consideration. I'm not recommending you go and invest your money with them. You certainly need to go and research that out yourself. Not the worst place, I think, to be considering looking at investing your money. So until next time, I hope you found this useful, and as always, I hope you keep very well.